All right, here we go live. Hello, everybody. Welcome to our Lunch and Learn Thursdays. We have hit June now, so we're in a whole new month of learning about different types of investments. So all month we'll have different type of investments from crypto to alternative investments, socially conscious investing. And today we're going to be talking about real estate and using that as an investment. So for those of you who don't know, we are Purse Strings. We're here to provide financial education for all of you out there. And when you're looking for a professional to put things in transition or transaction, we have top tier financial professionals who love to serve the female market. And we call those our Purse Strings approved professionals. Emma Butler with the Butler Group is one of those professionals, and she is going to be providing all our education with us today. So welcome, Emma.
Thank you so much, Maggie. I'm really excited to be live today and to talk a little bit about my experience and knowledge as far as investing when it comes to obtaining financing. I think that is kind of like a big unknown and probably prevents a lot of people from actually going ahead and doing it because they don't know the steps or they think it's quite hard to get financing for investment properties.
Right.
So would love to just talk a little bit about kind of the different options and what might be a good starting place when people are so many people who want to buy investment properties.
Yeah.
I hear it all the time, not just because I'm in the business, but I do hear it all the time, and the reason being um, it's such a great way to diversify your portfolio and have something for future income.
Right.
um, because if you have a property and you have people paying the rent, which is paying the mortgage, hopefully in time, what you will have is a property free and clear of a mortgage. Whether you want to then sell that property and take the money because the property has been appreciating, um, or whether you want to live off the rental income that is being generated from the property. So
I'm excited to jump in. One of my first questions was even going to be using properties as an investment. What does this even mean? And I think you just kind of covered that there. It's kind of buying a property and having it pay for itself and then getting some revenue. Was that, would you agree?
right, exactly, yeah. So that's what an investment property is. I mean, there's the residual income that you can generate from the investment property. Um, People also do, investment properties for short term.
Okay.
Um, and that would be more, if you were doing like fix and flip, maybe,
Yeah. Yeah.
right? You might want to look at that that you would need to be getting a property for a good deal, right? In order to do that, put some sweat equity into it, put some construction renovation into it, and then, flip it and generate equity there.
Right.
Um, that was very popular in more down markets, I feel. And
Yeah.
I think,
We've all seen the HGTV where they make it look like it's no big deal, but we know it's a lot more work and it's a lot more of an investment and work that goes into it.
yeah, I feel like for that, for me, I can only speak from just my experience. Um, you, it takes a lot to it takes a while for the construction work to be done. Okay. So you have to think about a few different aspects of that. You're holding the property, you're going to be paying the mortgage while the work is being done, it's not being rented out. What are the carrying costs of it? So all of those need to go in ahead of time, like when you're thinking about doing a fix and flip. You can generate some great income from it, but the cost of construction has gone up a lot. It's harder to get people to do construction work. That's like one of the main struggles is getting contractors in, general contractors that are good and to get the work done. So you really need to know some people, I feel, unless it's smaller projects, but if you're doing from the ground up. So you just, with any of these, whether it be buy and hold for a long term, just have a little plan in place. Speak to someone like myself and a realtor so we can give you some thought prompting ideas for you to think about and to budget. It's a lot of it is about the numbers, really.
So, people buy a house for an investment and flip it. And then the other way people think about it a lot is buying a property and thinking about the whole landlord and tenant situation. And that'd be the other way you would make the income. is what other ways can we use a property as an investment?
Well, there's holding it, there's landlord tenant. I mean, people do like the Airbnb hacking is something that I've heard about too. I don't know if that's exactly the term that is used.
Right.
I think I'm butchering that a little, but other people have like subletted properties and then rented it Airbnb. I don't have a lot of experience in that, but I know people have done that.
Right.
But that you don't truly own that property, right? Your name is not on it. Mind you, it's a way to generate income from a property, right? You can go out and you can put your name on a lease, and then you can take over the property and then rent it out Airbnb if you are so inclined to do that as well. It's really popular. And they're the only ways that I can think of at the moment.
No, I mean, those are great ways to use the properties for sure. And so when you're looking at investing in a property, what kind of like holding timeline should we be looking at? 1 year, 3 years, 5 years, 15 years. What are your thoughts there?
Right. So that is going to depend on what is going on in your life. What age you are you near retirement, you not near retirement, how much money have you put into the property, are you doing it for a fix and flip? Maybe it's a good time to sell and property values have appreciated and you decide to cash in on that. Maybe you've decided to leave the country and go travel the world and you don't want to deal with it anymore. There's so many different reasons. I would say if you're doing a shorter term, you would want to have generated some decent equity in it in the short term in order to turn around and then sell it. There's costs to buy, there's costs to sell. Generally, rule of thumb is, and this is just if you're buying your own principal residence, not even, you'd want to be holding something for about 2 years, unless you see a big appreciation, right? You've got to be in your equity. So you really would have to look at it on a case by case basis. I'm sure there's been properties in the last 3 years which have increased an awful lot, and you have to decide, do you want to take money from the property then and sell it? Over the long term, rule of thumb is the property will appreciate even more, right? So it just depends on, do you need the money? Is it something you want to cash in on now, or do you want to have it as residual income later on?
Awesome. These are great answers that you have. And it always does depend on, your story, your plan, what you want to do. And that's always changing. I mean, clearly the past 3 years have been crazy. You never know what your life's going to hold, but usually, the housing industry overall goes up. And so you typically gain some profit there.
Right.
So if you were going to buy an investment property versus just buying a home or a second home, is that process different? Any of those applications or guidelines, down payments, things like that?
Right. So the application process itself isn't different. I have a lot of my clients, I've done their primary home, I've done their second home, I've done their investment properties. I've got a lot of investor clients that have multiple properties that they buy. Once I have the loan structured for one and I have an application, it's easier for me to duplicate it because I have all their information. But as far as there's conventional conforming loans. Okay, so that would be your Fannie Mae, Freddie Mac loans that we can do on investment properties. You'd ideally need to do a 20% down on a single family and then 25% down on multi-units, which are very popular in Chicago. Multi-units are. In other states, they're harder to come by, right? But Chicago's big into their 2 to 4 unit buildings, and they're awesome for investment properties. They require a little bit more skin in the game, 25% down. So when it comes to purchasing an investment property, I feel like the biggest hurdle is saving money for the down payment. Once you have the money for the down payment on one, it's easier for you to get going with that. But as far as the income requirements, you can use the rental income that you're going to be getting from the property to help you qualify for the purchase. Now, and then there's different credit score requirements. It really depends on each individual person. But there's also additional loan programs as well. There's portfolio loan programs for investors, and they just go off the cash flow of the property. They don't even look at your debt or your income at all. So they would just go off the cash flow. It needs to cover 100% of the mortgage payment. So we don't look at any income documents from the actual person buying the property at all. We just look at the cash flow, which are great for investors. So we find that they're really popular as well. And then the same with the down payment, it's approximately about 20%, 25% down.
Okay. Yeah, that middle one that you talked about, I haven't heard about before, where you just kind of look at the cash flow.
Yes, they've gotten quite popular.
Interesting.
Yeah.
Let me see what this other comment is in here. Is there a difference for multi-unit property that you will be residing in one of the units?
Right. So you can do that as a primary home.
Okay.
Yeah.
And so you'd buy the whole property as a primary home, even though you're renting
Right.
out the other units.
Yeah. So just say it's a 4-unit property and you're going to live in one unit. You're buying it as a primary home. And you can then rent out the other 3 units. Again, very popular in and around Chicago area. They do it all the time. We've done so many multi-unit primary home purchases. The down payment, it depends on a primary home. You can either do an FHA loan, right, and do as little as 3.5% down. Conventional loans require there to be a 20% down for a primary home. And then there's a little nuances, I don't need to talk about every single program, but if somebody has questions they want to run by me, my contact information is on the website and people can reach out anytime. I'm happy to go through individual scenarios.
One of the questions I did have around that is, do you have to stay in that residence for X amount of years to consider it a home versus living there for 12 months and then moving out and renting that one room that you were staying in a 4-bedroom?
Right.
Does that make sense?
So, I mean, it's a good faith that you're buying it and will be staying there for at least 12 months. That's the idea. You'll move in within 60 days and stay there for 12 months. And then a residential, conventional Fannie Mae and Freddie Mac loans, when you say it's a primary home, you get a little bit of extra flexibility. With FHA, with government loans, they are purely for primary home purposes, right? They're really made for investment properties. But if you buy one as a primary home and then you want to move out and you want to try and buy another one, they'll check, and you may not be able to use, for FHA, you can't use the departing building's rental income to help qualify on a new purchase. I don't want to get too much into guidelines right now, but
of course,
a few different hurdles, but it's a year. It's good faith that you expect to stay there for a year and move in within 60 days.
Awesome. And then is there a limit about the number of investment properties someone can hold?
It depends on the loan programs that you're doing. There was a 10 property limit. Mortgage limit, not on the amount of properties. It's actually the amount of mortgages you have.
Okay.
Yeah. So, but the different loan programs have different requirements.
Definitely. So I think from this conversation of even just, wanting to start investing and using real estate as investing, there's a ton of different loan options. So that's why you typically want to start with a loan officer before you even go to a realtor, to kind of see what you're approved for. So you're not shopping out of your budget, your realtor is not wasting their time, and that you can buy now rather than in 6 months or a year, whatever you figure out with that loan officer, which is your portion of the process, correct?
Right, exactly. And with investment properties, it's really, they're not a primary home, right? You should have more of an attachment to a primary home. With an investment property, it shouldn't be as emotional. It's very hard to say that because I've looked at the investment properties and it's hard to detach yourself from it. And still visioning yourself living there, but it's all about the numbers. It's about the cash flow. So people will contact me and they'll be like, what's the rate on this? And what's the rate on that? And it's really like, okay, well, you need to really focus. What is your bottom line? What is your cash flow? If you're making a huge profit, the interest rates are higher on an investment property because interest rates are based on risk, and it's a riskier loan program for the bank, right? But what you need to know is that the interest is all a write-off against the income that you bring in. So when it comes to, it's important to talk to somebody and figure out how you're going to calculate that cash flow on the property, and what are a few other expenses that you should include in when trying to calculate your cash flow, and really figure out how much money you're going to need for the purchase. As I said, I think that's the main hurdle for people is getting together the down payment. So if you have that and you find a property where the numbers work, then it doesn't matter what's going on in the rest of the market. It's a good time to buy then for you.
Yeah, it is a lot about those numbers and knowing where your cash flow is at, and thinking about these other things that are more than just the monthly mortgage, but like taxes and upkeep and maintenance and things like that. Taking that all in, it's never just so straightforward. It is the numbers, but like you said, when you look at the numbers, if you see it's a right fit for you, it really doesn't matter what the market is doing.
Right. It doesn't. That's the great thing. The numbers don't lie.
So somebody else has asked a question asking, what happens if they make their own income as, they're self-employed? Is it harder to get a loan?
Well, you have those portfolio loans, right?
Okay.
So they don't look at your income. They're just going to look at the cash flow of the property. So for them, it's all about the numbers too. Does the cash flow make sense? If the rental income covers 100% of the mortgage, then they will give you a loan. As long as you have decent credit, right? You show that you've been able to make timely payments. And if you do have a property yourself, that you haven't been late on the mortgage.
That sounds important as well.
Right.
You want to make sure you're holding up your own home.
Right. So there's a lot of other programs out there now for people who are self-employed. A lot of my borrowers are self-employed. I enjoy working with self-employed buyers. And we have bank statement loans, different loans for both investment properties and primary home purchases.
Being self-employed is becoming so common these days. So the market needs to work with it, of course. So if someone's coming to you and thinking an investment property is the right fit for them now, is there any specific paperwork or detail they should bring with you for the first conversation?
No, I mean, for the first conversation, I would really want to maybe review somebody's credit, see if there's anything we can do. Maybe if it's not where we need it to be, to get it to where we need it to be, right?
Right.
Have a discussion on the different types of loan programs and the different types of down payment and the different types of property types, right? So they can have an idea on what they should be looking for. But if we're doing, depending on which loan program we're doing, I can look over their income documents, their pay stub, W-2s, things like that.
Right.
There's an online application that someone can fill out. It guides them through it, and it will ask them whatever documentation that we will need will show up there with a checklist.
Awesome. I feel like people should feel really prepared going out and starting to look at the market, because it's just all about being in the numbers, and you really should just talk to a professional to understand your situation. Is there any other last pieces of advice or tidbits you'd like to make sure our audience knows?
Well, I've asked a few people, how was their experience with investment properties? Managing investment properties and things like that. And a lot of people who I have spoken to have told me that if they were to do it again, they would get a management company. So, that is something to think about, and it depends on how much time you have available to yourself. But it does cost some money to get a management company. But they said in the long run, it probably would have saved them a lot of money with being on top of the deferred maintenance a little bit better and things like that, and budgeting. So when you might feel that you're able to do it all, but it might be a good idea to look into including the cost of a management company, perhaps, into your expenses and into that cash flow number.
Do you know how a management company usually charges? Is it like by the property, a percentage of the property worth, or like
it's based on the rent, like 10% of the rent or something like that.
Okay.
Yeah. But it varies. And I guess it would vary as well, depending on how many properties that you would have that they have under management.
Right, right. That sounds like a great tip because I can see, you know, if you're trying to earn more income and some more freedom, you don't want to be locked down taking care of all these details all the time, especially if you're doing, you know, want income that's going to help you travel or bounce around or have some more freedoms
Right.
like that. If you're just getting started, you know, and you would need to save that money, makes a ton of sense. But we, again, have to think about our situations and know what options are out there.
Right. And if it's, you know, you're buying one and it's a single family home and it seems pretty easy, or if you have a unit in a condo building that has a not a management company, but a maintenance person there, it's easy
Right.
to phone call. Slightly different. I think it's more of these multi-unit buildings. If you start building up your portfolio, then you might want somebody to take over so you're not just like getting burnt out.
I don't want to take care of those problems in my own house. So I don't want to take care of your problems either.
I just recently had to get a new dishwasher. I got a new washer and dryer, and my water heater went, and a pipe in the side of my house broke. And I've been there 10 years. I was like, what's happening? And I spent so much time trying to organize it.
It's a lot of work. It's a lot of work to upkeep a house. And so an investment property is just more work, but can lead to a lot of great opportunities as well. So it's a great conversation to have, and, you know your options, know what loan programs are out there, and start with a great professional like Emma, who can help you see your options and see what the numbers are.
Yeah, I would love to help anybody, and it's all about putting a bit of a plan into place. That I think that when you're a little bit more informed about something, it's not as scary to make those steps and vision yourself as being a property owner, multiple property owner, which it's just an amazing investment for your future.
It really is. It can create a lot of generational wealth, I have learned.
Yep.
So we always love that. Well, thank you, Emma, for coming on today and sharing your knowledge and expertise. We really appreciate it. Anyone could reach out to Emma at emma.butler@neighborhoodloans.com. Otherwise, she's one of our Purse Strings approved professionals. So you could reach out to her on our site, pursestrings.co. And we'll see everyone again here next week learning about another form of investments. So thank you again, Emma. We'll talk to everyone soon.
Thank you. Bye.
Bye.